Hello everyone, how's it going? What's occurring? What is occurring for everyone? Alright, give me a little second here. I need to go in and share this as I forgot. So we need to go to announcements. Okay, how's everyone doing? What's occurring? What's happening? I wanted to do something a little bit different here and jump into the yield curve, just so we can discuss how messed up this is. So let me know if everyone can see this. What you're looking at is the 2-year, the 30-year, the 10 and the 5. Now, to be honest with you, this should be the other way around. Do you know, we were discussing this before about the fact that you're getting a higher yield at the moment on the fact that's not correct. It is. Yeah. Okay. This is the 2, 30, 10 and 5, right? And in essence, what you should be expecting, to be honest with you, is the 2-year should be down here. You know, it should go in order, of course. So the more you lock your funds up for a longer period of time, the higher yield you get. You're actually getting a higher yield for buying, you know, a 2-year bill and bond at the moment than you are for holding the 30-year, which essentially is an inverted yield curve at the moment. Hey TP, how's it going? So this is just a nice way to look at it, to be honest with you. This is basically the short end, the long end of the curve, and this is the middle. You know, it should... Oh, I can get my pen out again. Let's do that. Let's do the pen. What was it called again? Pen... Epic Pen. That's it. A second till this loads. Here we go. So in essence, what we should be expecting with this, ignore. So the 2-year should be down here. You know, it should be like this. Okay. In fact, let's quickly go back to the cursor and just hide this a little second. So this should be the 2-year. This is the 5. This is the 10. And this is the 30, right? This is what it normally looks like, where you have, you know, an upward sloping curve, you know. And at the moment this is not happening. It's the other way around, you know. So we're essentially getting the inverted yield curve that's happening, which in the past, when that has happened, is typically a sign of the recession. So interesting. So we'll see what happens, you know, after the election year, because if they don't sort this shit out, if they don't sort this out, where this is inverted, you know, trouble is brewing in basically the government fixed income market, to be honest, which is basically the staple of the world, to be perfectly honest with you. So we'll see. So I just thought it'd be quite interesting to look at this, as it's a nice way to look at the curve when you see it like this, right? Hello Scalper, hello Mr. Bond. Eunice, how's it doing? How's everyone doing? So what do you guys think of viewing the curve like this? Do you guys do this regularly? Well, I suppose if you don't trade treasuries, you're not going to have a tall look at this, you know. So let me know what your thoughts are. Tony boy, how's it going? Nice of you to join us. I'm just drawing myself in the middle of the yield curve here. There we are. Right, I'll stop faffing around and let's run through the Treasury market before we jump into. Um, I'll get a hang of this pen thing soon enough. Okay, so relatively, I stopped trading Treasuries hours ago. Pretty weird day. I've been fighting with the mark. Well, not really fighting, to be honest. I think I took 2 ticks in the tens today. Yep, 2 tickaroos. Then we took 3 ticks on the 30-year, and I think we took 1 on the ultra. But the trade this morning, which I was in, but I didn't really manage it too well, to be honest. We had a pop of the highs. Basically, that was the trade of the day because the 5 and the 10-year was already popping highs, and the ultra, I don't normally trade the ultra, but it was a fantastic catch-up trade that happened earlier on today where the 30-year was leading, the ultra hadn't really moved, and the 5 and the 10s were pretty much probing highs. So I bought it on the anticipation that basically the ultra would play catch-up, and it did. But then we basically had some large orders that come in, and I get stopped out for 1 tick because I was trailing. Kind of a little bit cheesed off because we went, oh man, it was a glorious trade. So that was the trade of the day, executed a bit like a dick, and then still we did okay today. We took a number of ticks out of the market, but I found that I had to work really hard for those ticks. Do you know what I mean? It wasn't a simple day. So if we run through where we're currently sitting, the week we opened up fairly bearish on the week where we sold off, which we continued last week's sell-off from here. We then had this high volume node drawn out where we've essentially reverted back off it and now consolidating. I think that we will pretty much finish this week, well, at least until Friday comes out. We're obviously going to be, in this range now in Treasuries. I don't see anything happening, so pretty much, we will be in this sort of range now in Treasuries, at least until Friday with the half week happening. So what I quite like about this when it's half days is obviously, if the market does get up to this sort of region, or it does get sort of down to this region, you're in essence just going to ping it back into the point of control for the week so far, and then if it comes up in here, you're basically just going to be selling it back down into the mean, especially when it's half days and stuff, right? Because the market is just not going to have the volume or the direction to basically be cracking highs, to be honest with you. So that's my general sort of consensus, considering we've got a half day. Tomorrow and Thursday is off for Treasuries. Tony boy, will you be trading the Bund and all of this, because those markets will be open? So yeah, that's pretty nothing too exciting, and we may be now in Treasuries. Oh, I can't do that because I've still got this fucking cursor done, honestly. So that's pretty much it. Nothing hugely exciting in Treasuries today, and if we look at the ATR, so this is 50% ATR, this is the previous day close. We have in essence moved today, I think something like 26 ticks on the 30-year, something like that, give or take. So, which is to be expected because we started the week with almost, I think it was a full ATR move, and Treasuries doesn't seem to consistently put in full ATR moves, every day, to be honest with you. So, oh, you haven't. So tell me, how's everyone's trades been today? Did you guys trade at all? How was the JOLTS reports that come out? Obviously Powell basically decided that he wanted to help out his hedge fund buddies and just mutter something today to affect the market with one sentence. So we'll jump into indices pretty soon. As we know, the general rhetoric from me is you guys would be bored out your marbles if we watch the 30-year that is now at VWAP sorry, if we watch Treasuries, it's now at the VWAP price across the board. So we're not going to be watching that, are we now? Because everyone will be bored. So I'm going to quickly save this in case I did any drawings that I want to remember. We'll close and then let's open up our ladders. Second session with the magic pen, or whatever we call it, the epic pen, that's what it's called. I think they should have went for the word magic, to be honest. Okay, quick rundown of the market. Let's have a look and see. Haha, look at that, Chizo. So we discussed this yesterday, right? At close, we discussed, you know, the 1 hit, the 2 hit, 3, 4, 5, and then we have did it again. Seriously. And now we're you know, looking to go back up here. So currently right now, you know, we maybe try and get a probe above here. We've already probed above here. And then do we think that we're going to get up to here in this session? You know, probably not up here. With the obvious setup right now that we will be looking for any sort of positions to fade this back to the point of control. I still find this absolutely astounding that buyers are still holding this up after 6 hits. Are you talking about ES, guys? So Eunice, nicely done. I mean, one of the first rules that you need to try and have is if you are hitting at least your average upside for the day, you need to basically reduce your size. If you're going to continue trading, reduce your size, because it should be a cardinal sin, in my opinion, if you put in your average day's profit and you see a glorious setup, you should not be turning that back into a loss, in my opinion. It's just a nice rule to have. You know, like today, I had to work, seriously, I think I took like 3 ticks on the 30-year, 2 ticks on the 10-year, and 1 on the ultra, and I had to work hard for those ticks, you know. I found it quite a challenging day, to be honest with you, considering the trade of the day that I traded like a dick. But you know, just as a general rule, you need to, you know, when you have those simple easy days when the trades are painless for you, you need to bloody cherish those days, man, because it doesn't always work like that, you know. So I definitely don't think in this session, I would like to see if we can get up to this sort of range up here, because it would be a great fade back down into here. Don't think we're going to get here, but we are sort of approaching. If I clear this now, and then go back to this, we are approaching, you know, this sort of level right now. You know, if we draw it kind of in here, this is quite a big range, but we are now approaching out of value. So if we remember the theme from yesterday, where they faded the highs here at value back in, they didn't even allow it, whereas today they've hit it a little bit more. So general bias for the end of this session is to basically be finishing back down in a rectangle that we've had drawn now for like 3 weeks, and then we might decide, are we going to go up to here? So let's extend this a little bit, move it up a little bit. So if we do get up to these highs, but it seems quite a world away. I mean, how many tickaroos is that away? So if we take it from here to here, we are 124 ticks away, which is extremely unlikely considering we've got no data in the calendar right now. You know, so there's no data on the calendar. to really suggest anything. But look at these orders up here. So I see what you mean. So yeah, exactly. Traded a little bit of Ultra today. There was a great catch-up trade, dude. On I just traded it like an absolute muppet. Um, there was a glorious trade. What time was it at? I think it was just before open. I think it was just before open. I'll need to check my diary. But I think it was just before open or about open. Definitely before the news came out for the jokes. A couple hours before that for definite. Where the 5 and the 10s, the market was not completely correlated today. The 5 and the 10s were leading the highs. The 30s was a little bit behind the 10s, and then the ultra was really far behind. So it was a really good catch-up trade today. And I get basically hit for at one tick, and then it went like 10 to 12 ticks. So I was pretty pissed, to be honest. On the session, wow. This is grind of death, plus 28k delta. Jeez, oh. So yeah, I think we'll probably fill out these orders. So let's mark this shit out. I don't know why this cursor gives me the bit of fear as if I'm going to place orders when I'm not meaning it. I don't know why, but anyway. I wonder if I can change this cursor colour to white. Can I do that? Oh, look at that. That's better. Fantastic. Okay, so note these orders. Let's place the high on it, but I would be extremely surprised right now if we're not going to take these out. But this just looks like basically these people closing out their positions, to be honest. Oh, look, we have the same companies doing the same shit as yesterday. Look at this. Same pattern. This. Interesting. So they seem to be spoofing, what is that? My brain. 400 contracts that they are moving continuously. Same firm, same bullshit that they were carrying out yesterday, right? And they've got the same up here, so you can see that this 400 here is the same here. So these orders might want to get filled. They've just been cancelled. Great. Honestly. So we had this area drawn out. I mean, do you want to be fade when the market is plus 28k delta and doing this behavior? Probably not. If I was to consider a fade here, I would be waiting for the market to do at least some sort of pullback, then a sweep of the high, and then there. But if we look at, oh, it's so far away. We're just in no man's land at the moment. To be honest with you, when it has like the one thing that I've realised about order flow is you almost need to be on the side of the path of least resistance. Now obviously it's 28k delta, so if you were fading back to the mean on the high of this session, then you've been absolutely abused. Nico, how's it going, dude? So let's see the Russell. The Russell is at point of control, not really doing too much. Dow is still at the highs and NQ's pulling off. So as we expect here, the NQ is pulling off, which is causing a downtick on. It's causing a downtick on ES. Now the thing to consider here, right, is we have to have profit taking right now. Okay, the market needs to profit take because, as we know, the majority of contracts that are traded on a day are closed. I know, James, crazy. Crazy how choppy it's been. I have had such an easier life since switching to a thicker book. Someone just came in the size there and hit them. Let's see if they need to bash it down, because that was quite a... Looks like a bit of size just come in. And as we notice how fragile ES is to NQ movement at the moment, basically NQ is leading. If it's dropping off, the Dow is not as correlated, but the Dow's still sitting at the highs. Anytime NQ is selling off, NQ's ES is ticking down, and then NQ is popping higher. Just watch how tight the correlation is. We all know it's correlated, but especially on these types of days, if NQ is dumping 15 ticks, then ES will pull back a few, typically. Can almost be your gauge, to be honest, if you're looking to be a buyer in this. So you said the thing was, bid was really thin most of the time, and offer was really thick. It's something my eyes are not used to seeing. Yeah, so in essence, what you're basically seeing there when that's happening, it's actually to be expected, because on a day like today, right, there has actually been no selling. I mean, seriously, in order to get 28k positive delta, there has been no selling. So what you are seeing when your 28k delta, or probably stayed at least what, 25, 24 when you saw these orders, when the offer starts to really thicken up there, basically that is the long positions getting out of the market, and none of that shows up on delta because it's only market orders that show up on delta. And in order to have such a lopsided plus 28k, you have to only have buying, because otherwise it would be like, what, 5 if it was a bit of two-way. But I think you'll find once sellers do start to step in here, we can zoom in a little bit here, right, so you can see this. So if we look at this today, sellers came in, or at least delta came flat here, where we had a tiny bit of consolidation, right? Sellers came in here where we had a pullback. Okay, delta was flat, but we went up and up here again, so the offer had been pulled basically to get here, and then there's just been absolutely no selling here. The offer has not stood in the way at all. So these guys that basically bought here, they need to start getting out, and that's where you start to see them planting, 100, 100, 100, 100 like this, and that's them basically getting out of their positions, because as we know, majority of this doesn't trade off. Sorry, doesn't carry over to the next session. Does that make sense? So delta is a fantastic gauge for context for the day. Fantastic gauge. So it basically allows you to see which is price. So how do I explain this in a sort of simple manner? So if you've got a really, really positive delta like you have today, right, it means that you would expect this. This is what you'd expect when there's shit tons of buying, because look at it, it's so one-sided, right? 28, 30k delta is a really, really one-sided day if it's to the buy or sell side, right? But also it means, in order to get to 28k delta, it means that no one has been selling, so there's been no fresh sell positions come in. And then on the flip side, right, if you if you saw the market was say plus 27k, I mean this is really obvious, right? But I'm just going to say it anyway. If it was plus 27k delta and price was, let me get my trusty pencil out here. If we were plus 28k delta and we saw it going like this, okay, but price was still in here, this would very simply, just at a glance, tell you that basically all of the buying is being absorbed in the offer. Okay, so it means that if they were then to probe this low, all of that buying here, right, would then stop out below here, then we would have a sweep down here. But right now, generally what is happening is we've just, delta is following price, which is the sort of normal scenario of what you'd expect. But from my experience, okay, when you have this amount of one-sided delta, it just means there's no selling. Obviously there's no selling. I mean, look at this. But it is, you know, does that make sense? I don't know if you guys are using delta in that way, but it's the way you know, it's almost like the way that I use delta is, does it make me scratch my head or not? You know, because if I have to scratch my head and have a double take, I then need to analyze, you know, is the offer been absorbed? Is the bid been absorbed? Whereabouts could the stops be triggered if market probes to there? You know, have the one-sided delta if they started to exit. And the thing is, we always say when the market does this sort of one time framing, if we put this into its own profile, we have in essence been one time framing now since here, okay? And when the market does this behavior, as soon as the bid gets pulled and sellers actually start coming in, this will drop like a cliff. It will just take all this back, you know. So this whole area will be taken, then we have this sort of higher volume node here, okay, and then we're then back into value, pretty much. Okay, so we see the market, obviously this is where the price is consolidated here, but this is where some volume's been traded out. So this whole region here can very simply just be taken back, and we are now probing into the area that we've drawn out. So we'll see. It's going to be in the next hour and 10 minutes. We'll see what's going to happen. Well, I wouldn't say of course, I mean, with James, everything I do is about context. There's not one single thing that how do I explain this? I don't look for A and B then happening then sell. You know, everything I use is context for that day, because every day is different. But it just gives me an idea. That is an absolutely massive circle. Everything I do gives me an idea on the day, you know. So really you don't want to be fading this until sellers start to come in, and ideally you want to see the bid be pulled. But as I've said, once they pull this bid and sellers start getting aggressive, we're going to first test like 48s. So let's draw this here. Sort of 48s where the start of this sort of higher volume area coming in down here. Oh, scalper with the tilt stats. So you're saying it's an average price of 50 but short. I mean, I would have thought surely these dudes are just buying higher highs and stuff. I mean, this is a day. Seriously, this is one of those rare days where if you just trade candlesticks, you should win. You know what I mean? Where the market has just went parabolic up, slight pullback, parabolic, pullback, parabolic. You know? So any typical charting dudes where, you know, let me bring this up and I'll show you what I mean. If you didn't trade order flow, you know, and you did something like this, you would pretty much be like, okay, so I do this, there's a pullback, this happens, and then it pulls back, you know, to this sort of standard next high, and then it just goes parabolic. This should be a day where traditional candlestick people, you know, keeps them in the game, you would think. You know what I mean? It's the most standard charting patterns ever. But then somehow they manage to be net short on the day. You know, honestly. No wonder these firms. So first level of consolidation was seen. Hello Neil, how's it going, buddy boy? So let's draw that out. So they're net short 50. God, they're underwater. They'll probably be saved, to be honest with you. They'll probably be saved today. But as we said, we need you know, Delta needs to do something, to be honest. So we're starting to see it flatten out a little bit. NQ is popping, so no fade is going to happen. Well, that's happening, that's for sure. As that continually pops, how far away are we from the highs? See it reacts at this 20 lot. But there's nothing major really on the book. I mean, there's some orders up here. Let's see about the downside. These are probably not real. There's nothing really here. Okay. There's not really that much there. I don't trust these orders here and these orders here. This is the same algorithm from yesterday that's just fluffing these around. So these are just continuously move. There doesn't appear to be anything else on the books, which, to be honest with you, is to be expected now that we've got a half day tomorrow and Thursday. So we will see how they're going to do it. And I think this move that's happened here, is this just from the Powell speech that he's pretty much come out and said, I'll help out the hedge funds in a roundabout way. Also, if you guys have not hit the like button, hit it for me. I can see there's 26 of you lovely people in here, but only 11 likes. 11 is my favourite number, but I would like it to be on par with the watchers. So hit the likey button for me. But if I'm honest with you guys, as we've discussed before, I absolutely suck at trend trading. So this type of price action is like stuff of nightmares for me, especially on indices, to be honest. It's actually, you know, if you're trading bonds and stuff, it's very, very simple to watch this, see this happen, this type of action. Because when it moves, it's actually like this all the time. So you just need to go with the path of least resistance. But not so much in indices. How often do we see this, you know, just straight up? It doesn't happen a lot, does it? Yeah, I mean, Cal, this is exactly the. This is exactly it. You know, this price action is like, it's just, you know, stuff that would haunt my dreams. This type, I hate this price action, because if you're fading, this has been the only real chance where if you caught the fade of here, look at that, would be. So if you caught the fade of this high here, this has pretty much been the only sell. And just by experience, I knew that this would be a high because it always does that. It just doesn't randomly pull back for the sake of it. It always sweeps a high, which it did first, pulled back, and then basically we saw a large amount of buying come in here in one size, hitting one clip, and then we've basically just went parabolic, to be honest. So clearly a large firm has stepped up and just absolutely been slinging some size all day. I mean, look at the amount of buying on the way up here. They've just been continually drilling it, which is to be expected, right? When you're 28k delta, you're going to need to see a lot of buying. But you only, like I said, I mean, I would say this till I'm blue in the face, but you only get 28k delta if there's no selling, because selling balances this out. So it just means the offer has not been standing in the way at all. But I don't know if you guys have been watching the price action, like you said, in the way up here. These guys need to gradually exit out their positions, you know. So we'll see if these orders up here are real. This would be a good target for them to start lifting the offer. See a little mini stop, because some people can't help themselves and start fading the world. So we see a little mini stop up here that should take us to 59.5s, and then we'll see what the high of the 61.5s, if that trades. So we'll see what the price action is like when it gets here. But I just don't really think a lot of this is too real, to be honest, considering same bullshit here as here. Up 7, down 10. Well, I take it, Kel, did you fade this? You caught this, and then you probably faded again, and then you've been chasing your tail all the way up? Is that what that went like, or how did that work? Did you take any long positions, or were you just fading back into, you know, the rectangle in the middle down here? What was your setup? But again, we're not seeing any real selling come in. We want to see, ideally now, at these sort of levels. I mean, to be honest, you never know. This market can. Would it be extremely surprising if we continually go bids up here, 100 ticks, but our 28k delta? I mean, there would need to be nothing on the offer in the way up for that to happen, and that just seems extremely unlikely. So I think we might potentially sweep here if there's to be any form of selling. If we sweep this sort of area, and then we might work our way back down. Because delta now is becoming flat here. So if sellers do start to come in, we should see it. But again, I'm kind of clutching at straws here. Would I be trading this in any way? No. Before I would even consider, I would be looking for something like this. When the price is, you know, completely parabolic, where it's basically doing this and it's a grind to death, you want to see something like price does this, pulls back a little bit, then sweeps the high, then you have some absorption coming up here, you know, where they absorb it, and then you would then see the capitulation. Trying to fade this when it's just straight line stuff, the hard thing is, if you even attempt to fade this, the trouble is when you actually do catch the fade down, right? Let's be realistic. When you catch this move down, you've already done your arson, because you will have faded here. You will have already faded here. You know, you probably faded this as well. So you've got the chances today of, you know, if you didn't take this and missed it, you faded this, took a stop, or even worse, you added here, you then took another stop, you then faded it again, your account's dust. Do you know what I mean? It's very, very easy in these days. If you lose shit and start mashing keys, you basically go bananas. When you're having days where it's 28k plus delta, my advice would be to wait for the market to do something like this, right, where it goes up, pulls back with a decent pullback, sweeps the high, right? It then fails to break, and then you have the sweep down. You may not get that, but see, to be honest with you, if you don't get that to happen, it is going to be so much nicer on this day to wait for something like this, and the key being you see the absorption up here, right, up at this level when it's touching, and then you get your confirmation to fade back down. And if it doesn't happen, then you don't get any trade. Do you know what I'm saying? Because if you consider to fade it when it's one directional like this, you're going to be in trouble. Yeah, exactly, Cal. That's the hard part, dude. Okay, so notice now we're essentially making a high, right? But delta is not moving. So there's a spoof here, right, to try and probe this a little bit higher. Now watch how we see if we see some absorption happening. We want to see a pullback. Okay, so I've absorbed 400 contracts. Note, right? There has been, look at the positive delta here. Okay, I didn't check, were they pulled? I was too busy drawing. I assume they were pulled when they were drawn. Okay, so there is the first little mini sweep that we've got from here. Okay, now bearing in mind we are clutching at straws right now to trade here. I don't really advise trading this, but we have done a little sweep. Okay, you want to see the bid now be pulled. Not fantastic. There's 224 just traded and absorbed on the bid still when you're still, you know, up in the highs. This is pretty much just pulling back because NQ is. The one thing that I would note is the fact that the Russell here is still at point of control. So for this to pull back, I would also like to see the Dow go down as well. And Russell can do whatever it wants because it's clearly not following any real correlations today. But notice how responsive NQ is. If this goes bid here, this will go bid at the same time. Makes sense? And continually watch this delta here. Okay, you want to see this matching because right now it is not made a high. Okay, so we've got a tiny little bit of divergence here. It's just something to note. So it's letting you know that ever so slightly that there is a little bit more absorption happening right now. But again, we need to wait and see for this first level where it does this. Then we get a pullback and we want to see it do this, absorb, and then go down. That's the play. And actually, you maybe nicer if this just doesn't happen, because this is not a pullback. You know, going up, consolidating at the highs, doing nothing, and then doing this, it's not a pullback. Hey John, how's it going, dude? John, so I trade personal accounts mostly, and I trade prop as well. Been trading for many years, and I would rather put pins in my eyes than trade NQ. Terrible product in my opinion. I only use NQ for correlations. This is NQ you're seeing here. Look how thin the book is. The book is extremely thin. So we're mainly an order flow group here, so where we trade order flow, and NQ is too thin to have an edge right now, in my opinion. But I typically, John, I typically trade treasuries. I trade predominantly the 10-year and the 30-year is the main markets that I trade at the moment anyway, because the book's a little bit thicker today actually, guys. If you note that we're, you know, a little bit more thicker in the book, but essentially this is a limit market for the selling side today. Watch this price, watch 60s, see how we react here. Yeah, exactly, dude. I think that the MBO stuff. See, when if I'm honest with you, mate, the MBO data from when I've been on the screen today for ES has been shocking. This is not doesn't provide you any value, because if we look at these orders here, right, this is an algo and this is an algo here. These are being moved constantly. These are not real. And as we were saying, the book is pretty thin in terms of these orders. But there's some days that it can be pretty. It can provide you some value. A lot of the time. So, but I would say it's like any tool, mate. Some days it has its good days and bad days, dude. But I agree today that these orders are nonsense. These 100 lots and 150 lots. When it does become valuable, in my opinion, is when you see them. They'll plant them. They'll plant like 100 here, 100 here, 100 here, 100 here, and they'll do it before some volume comes in. And it gives you a rough idea where they're going to look to get filled because they know the volume's coming in. But when it's doing this, when this is bouncing around like it's just done right now, this is just, I would say, for traders, just a little bit confusing. So I suppose, like everything we discussed, it's about context and understanding what is real and what is not. So that would be, I agree with you on the MBO for today, dude. John, so let me ping this. I've got a playlist for you, dude. I think it's actually in. Yes, it's in the description. I'll ping it in here for you, dude. This is a playlist about order flow. It runs through what is the DOM. It runs through what markets you should be trading. It basically gives you an idea into the main sort of way that we perceive the market here. And footprint's probably a good way to get introduced, to order flow. But over the years that I've done this, I just like the DOM. To be honest, this is market orders in the middle here. This is market orders. This is resting on the bid. This is resting on the offer. Here. So it's got everything. And again, it just depends on, some people like to view the market in certain contexts. It just whatever resonates with you, dude. That's the main thing. Okay, so we're getting our little pullback here. So let's see if we do the thing. Create the classic M is what everyone would be saying. Ooh, it's an M. So we'll see. Yeah, DV, I did have that, buddy. But to be honest with you, the one thing about Sierra, unless you've tweaked it and it's something I've missed, I really like to see the best bid and the best offer here. It just feels weird not having it, and when you combine the ticks, you don't have it. So unless Sierra have done an update to allow that. And plus as well, I quite like NQ. It's really responsive for ES. So I found that when it was 4 ticks, it didn't give me as easy as a read. It basically became ES, to be honest with you. And I think when the market's like this, it's really responsive. Watch NQ go bid and then ES will go up 2 ticks. So, but that's just maybe me, man. I've looked at NQ on 1 tick for so long now that I'm more accustomed to it. And as we say, man, whatever works for you, everyone views things differently. Oh, they have? Oh, okay. I'll need to maybe look into that, man, to see. I didn't really give it enough time because I had to configure a lot of other stuff to get that done, to be honest. Let me know if you guys have got any other questions. Sorry Neil, I'm just seeing your question there, dude. Trading today was okay. I think I took like 2 or 3 ticks or something on. Ran over at the start of the stream. I think two or 3 ticks on the 10-year. No, 2 ticks on the 10-year, 3 on the 30-year, and 1 in the ultra. But I had to really fight for those ticks today, man. It was not that simple. I think the max drawdown we had in one trade today was 3 ticks, which is getting close to my stop, to be honest. If it went one more tick, I would have closed it. You're using tick charts and NQ, got funded but lost the account because I got on an anger. So John, number one question for you, dude, are you journaling your trades? If you're not journaling your trades, and if you watch that latest video, I really advise you to click on the link in the description and get a journal. Because the reason why you're getting angry, if I'm being completely blunt with you, is because you don't have enough trades under your belt to believe in your edge. If you did, you wouldn't get angry, because you would know that X, Y, and Z can happen easily. Look at NQ dumping and ES is going down. Okay, so we're doing the thing. We're now selling off. And notice how that actually happened from the first time that we've seen a little bit more absorption and a divergence as well. Honestly, dudes, if you can manage to use Excel or Google Slides as a journal, more power to you. But seriously, you can literally just export your trades and import them into TraderSync or a version of it. It's not expensive. It's like $20 a month or something, and it gets you into routine of doing it. Because if you can write an entry time, an exit time alongside a size, how many executions you had, what your average fill price was, what your max favourable and max adverse excursion was, if you can do all of that on slides, more power to you, man. Me personally, and I've been doing this for years, I am shocking at admin. Shocking. So I've always found I just want to have the facility. If I take 5 trades a day, I note my thought process in my diary, export the shit, and then fill it in when it comes to the end of the trading session. And I spend probably about 30 minutes to an hour a day filling in my trades at the end of a session and just making notes of what happened versus my pre-market trade plan. How did the market react to the jobs that come out? Was there any speakers? What did the market do? How was the ADR? And also you need to know things like, there's tons of things, man. Honestly, once you start knowing the product in and out that you trade, and you start building up enough data about the products that you trade and how you behave executing positions, it makes a massive difference. You then won't get angry, and you need to start seeing things that the next trade and the next trading day doesn't make a difference. It's over the course of the next quarter that makes a difference. You need to change your mindset a little bit, dude. It takes time, of course, man. And the first thing you need to do that is you need to start spending more time in your journal. I would even advocate that journaling is more important than the damn strategy. Hey dude, so I don't for the stream. So when I have some markets up, I'll have the tape, so I'll have up the time and sales. But to be honest with you, it's hard to stream all of that, and as well, having a time and sales up for streaming is not really ideal. But typically my time and sales, I have two time and sales for ES. For example, I would have a do not combine. I typically run do not combine because I want to see what's happening in one clip to see how they're breaking it down, especially with the ES being thinner these days. So I'll have a do not combine with no filter just to check the speed of the tape, and then I'll have a slightly higher one with 20 lots that are done in one clip, and then I will ultimately filter that to highlight sweeps and to also show me probably an ES with how thin it is, maybe larger than 100 lot in one clip. But I don't use it for the stream, and plus I'm running out of space for the stream as well. But that would be the setup, to be fair. But good question, dude. Hand grip, honestly, John, great. I'm not gonna lie. I use a stress ball. Keeps my hands off the mouse, and I've had it for a long time actually. Now I had one for a while, didn't really use it that much. Got some new ones, but I actually find myself when trading having my hand in a stress ball a lot. It keeps me. I wouldn't say it keeps me grounded or anything, but it just, I don't know. I feel like it works, to be honest. Whatever you can do, man, to stop you clicking the mouse and making stupid decisions. Another thing also that I do as well is if I get in and I have a good couple of trades, right, I will switch to sim for a day. And Sierra makes it really simple where you can just go to trade here and then turn on sim mode here, for example. So if you can do that on your platform, do it, because the amount of times, I can't tell you, I've made that conscious decision to say, right, I've had a good day, you know, I'm just going to switch to sim. I'll go away and get a coffee and get lunch and come back. I get a bit antsy and click the button and I get into a shit position. And I'm like, why did I do that? And then I realise I was on sim. And see when that happens, when you do that and you get in a shit position and it's in sim, there is no better feeling. There is no better feeling than that, if I'm honest with you. So I do that at times as well. Basically, there is tons of little things that I've tweaked over the years with the objective to just stop me being a dick. Because that's the main thing. Controlling the down days and stopping yourself from entering a sort of bad state of mind is the key. And how you get into a constant state and constant flow with your mind is you need to understand your journal, and you also need to have data, you know. So say for example you take, I don't know, 200 trades a month, for example. Over the next 3 months you'll have 600 trades, and that is enough sample size to at least give you probably 80% confidence with a statistical edge to determine what you're doing is not luck. So when you think about it in terms of the next quarter, really the next couple of trades and the next trading day is absolutely meaningless in the grand scheme of things. So when you watch a lot of new people that start, they literally feel the pain for every tick. You know, seriously, every tick you can hear them losing their marbles. Okay, so we're seeing some positive delta come in right now, and the market is not having it. So we're seeing a bit of a flip right now in the behavior. This is the first time today where sellers are now slightly starting to absorb a little. Another thing too is you're almost better when you're in that revenge mode is just set a target and a stop and leave, or just get up and away from the keyboard, as TP said. Which level do I recommend? Oh, I think I have the middle one. Basically, I would recommend getting the one that has max adverse and max favorable excursion. Also, if you click on the link as well, there is a sale going on right now. I'm actually thinking if I can if I can cancel and and take the sale, because the sale is 60% off at the moment, which is a lot, and it expires on on the 4th of July. Now, I don't think it's only annually, um, but you should have a look at it and see. To be honest, you can try it on trial and have a look. I'm assuming majority of you, if you're trading with Iron Beam, with Edge Clear, or you're trading Rhythmic, regardless if you're trading your own personal account or with prop, depends on your broker. If it's stage 5, Edge Clear, Amp, whatever it is, you'll be able to go in there and export your order history or recent orders into a CSV file, and then you'll be able to go into TraderSync and import that, and it will tell you basically what you need to do. But once you do it once, it's 2 seconds. I'm not joking when I say this, but it takes me literally 2 minutes to go and export my trades for the import them, and then it instantly tells me all of the stats that I need. Then I make a note on each trade, assign the setups, and make an overall note of my observation of the day. And then I run over each setup and just make a note to say, did I trade like a knob or not, But probably the middle one, Trader Boy, I would go for, dude. The one that you need max adverse and max favorable excursion, because that is going to be, once you get build up enough sample, they're pretty important variables, because it tells you, how many ticks or monetary value is going against you for you to make the return, and vice versa. And you can see there that over time, if your average stop is, these numbers are going to be relevant to your own, they're arbitrary, but say you take a 10 tick stop on average, and you know that your average max adverse excursion is 7 ticks. Well, the times that it goes 7 ticks, does it ever come back to actually make a profit? And if the answer is no, then you don't need a 10 tick stop. You can have an 8 tick stop. So you can save 2 ticks on every losing trade, because it lets you know over a significant sample that you're in essence, that doesn't return back to the price, if that makes sense. So all these things are important, man. Yeah, John, I would say you need to obviously know, honestly, if you don't know this from your journal, it's hard, but you need to know things like, how do you perform in pre-market? How do you perform in regular trading hours? How on specific days of the week, do you tend to go from strength to strength, or do you tend to start with a losing trade? What's even worse is if you actually tend to start the day positively, right? And those are the trades that you're doing on sim. Very typically, people are more fresh and on the ball in the mornings of the day trade, for 3-4 hours a day, and then they tend to give their money back when it gets to the end of the session. NQ is absolutely dumping right now. I've seen the Dow pull back a little. Good question, Olav, dudes. Well, I'm biased because I've been using depth of market for so long, and I'm more of a, footprint wasn't really used as much when I was using depth of market, to be honest. So I prefer just the depth of market over everything, if I'm honest with you, dude. I think that footprint is just another snazzy way to look at market orders, but some people, it really resonates with them. There is absolutely nothing wrong with footprint, but the main reason why people use it is to spot imbalances. to be honest with you. As you can see, I've got delta here. This is delta, and this is market orders, which, to be perfectly honest with you, is the footprint anyway, in my opinion. Good question. My opinion on correlations is you need to trade correlations in the asset class that you're trading. So if you're trading indices, don't use bonds. If you're trading indices, don't use the dollar. Dollar's actually not a bad one, but still don't use it. Use the other indices such as NQ. NQ is probably a fantastic leader for ES in my opinion. Just very simple. If NQ starts bidding up right now, this will go bid. And if you want to take it an extra step further, I would recommend trying Tick Strike. There's a link to that in the description. It's good for indices where if you want to know what volumes can into the underlying stocks, you want to maybe get some market internals in there, like the tick or the advanced decline line, you can do that. It depends how granular you want to go into it. But I would say if you're mainly only trading ES, it's probably going to be beneficial to you to know which money's coming into the six big boys that make up like 26-27% of the market, which you're talking about, Microsoft, Apple, Nvidia, Tesla, Google, Meta. That's probably your six big boys, right? And very typically when you see ES drop, NQ drop, selling coming into Apple and Microsoft, you better believe the market's going to go down. So you can try all of that. It just depends where you want, and you need to try different tools to see how they resonate with you. In the past, I of course have tried Footprint. As I think Footprint is fine. I just think Footprint works great. Footprint works great when it's at the left of the chart. That's the problem with it. Whereas DOM is more live right now, in my opinion. Hi John. So I'm not a major fan of Bookmap, to be honest with you. I feel to be blunt about it, I feel it's overpriced for what it is. I think the two main products that you should be using for OrderFlow is either Sierra or Jigsaw, to be honest. Basically Bookmap have came out with a solution that is best guessing buy stop orders and sell stop orders, and also it can work beneficially if you really set the thresholds. But the trouble is, majority of retail don't really even know what we're talking about, never mind going into these complicated platforms and setting thresholds. I've watched some tape on NQ Bookmap, and it's calling iceberg orders when there's been like 3 lots traded on the DOM and stuff. I mean, it's madness. Now, I think Bookmap is another decent way to look at the heat map. In my opinion, the volume dots are not that accurate, to be honest with you. But this is just my opinion. If you prefer to look at Bookmap and that resonates more with you, where the liquidity is at the highs and the lows and you see it, that's the thing. I do think it's extremely expensive unless you're getting it through some third-party service or something along those lines. Last I checked, it was a couple $100 a month. But that's the way I see it. Honestly, all of these things are slightly different ways of looking at the DOM. Footprint is, the heat map is, at least with the heat map, you're at least getting to see the limit orders in the book Footprint, you're not. You're just getting to see market orders, which is literally this middle column. And as dude, I think your name's Rob, isn't it? An X line. I think your name's Rob, isn't it, dude? As Rob is saying, footprint is pretty good to note your selling and buying pressure and imbalances. That's pretty much its unique point, where you can highlight imbalances where there's been a massive contrast in the buying and selling, and then pretty much in general, if you see a retest of that, as an example, the price really should not be breaking that level again, you know, if you're looking to go long as an example. Yeah, buddy, I'm pretty blunt here, mate, to be honest with you, and I would really try any software if it gave me an edge. I've been doing this shit for years, and I honestly don't know how they're managing to say, how are they managing to call that there is buy stops and sell stops, considering stop orders are broker side, so no one get any fucking idea when they're collected. In my opinion, the easiest way to spot a stop order is when you see a blip through price, and normally it happens when, you know, let me get my trusty damn pen out here, but you'll normally see a blip in price when you hit here, right? When you hit this level, you'll see the DOM whoosh, it'll sweep, which means you've just essentially had all the sellers now become buyers here, and you see a blip in price. And that's why they bang it through these levels, because they get stop orders triggered, and then they then get to flip and basically flip their orders here, right? So imagine that, for example, they bang it into this price here, right? Actually, they want to get out of their positions, right? They want to get out of the long positions. They're actually stacked up here like this. These guys that are looking to get out, okay, they need to become the other side of the trade. Does that make sense? And that's why you instantly see this sort of snap back motion. So you'll see that like price will, you know, it'll hit a level like this, right? And then it'll quickly do this, you know, very quickly. It'll hit it back, and you'll see some levels trade. That's them getting out of their positions, right? And then they were the one that was banging the bid anyway, so they pull their bid, and then before you know it, it's back down here. It's very, very common behaviour. It's literally classic market making. And in my opinion, Bookmap are almost trying to say that they can determine when these sell and buy stops happen. And also, if I'm being completely blunt about it, that weird sort of bubble making sound that it makes is a bit annoying. Anyway, but it is what it is. I don't want to harp on about it. It's quite a cool product. I think it looks aesthetically pleasing. I think it's extremely expensive for what it is. So, said my piece. When signing with Top Step, do they give you a Rhythmic account? Yes, dude. I think every single prop firm in this day and age offers Rhythmic. Because, yeah, to be honest with you, it's only the decent if you've got a decent software or decent platform, you're going to need Rhythmic, to be honest. You're going to need Rhythmic. Yes, Rob, that's the thing, dude. They're kept other sides, so it's just your best guess. So they must have some sort of fruity algorithm that basically just guesses when there's a blip in price. That's pretty much all it is. And you see, it sounds appealing to know when icebergs happen, but icebergs in the ES now are so common because it's broken down so much, the orders. And I would say more often than not these days that when they bang it through an iceberg, it's just another blip, you know, through price, to be honest. I actually slightly prefer it when, say you're at the highs here, right? So say we're in this price, we're trading here, right? And someone massively absorbs here, so there may be ES would probably see, I mean, what would we call an iceberg probably these days, man, in ES? Like 600-700 contracts, maybe even 5 would be in here, right? And what you notice, buyers will be drilling into it and they'll literally absorb over a few ticks, and buyers will be drilling, it'll be a one lot algo that will be hitting and it'll be drilling. And some people will be thinking, oh yes, it's holding, I'm going to short. But what you'll notice is, see when that order is done, this market will blip. It will take that out and then you'll go up and fill out these orders as an example. And once that's done, they'll then bang it back. Is typically what happens. You know, I actually prefer in ES to look at icebergs in that manner. Rather than before, if you guys remember from a couple of streams back, some of you were in trading in that session where we had a 30 lot that was it was at 30 price point and it literally held it by a tick, you know, it held it by a tick. So icebergs don't always hold, to be honest with you. It should just be another area where you start to scratch your head and see, holy shit, someone's really absorbing this level. So what's happening on Delta? Where are we at? So actually we're seeing, right, this is now what we said would happen as a rough idea. So we did pull back, now we're hitting here. We want to now see this sort of behavior. So let's see what happens. Okay, so they've did a nice little mini stop run with 300s absorbed. Let's see what they start doing. Are they going to fill this out? Now they start flashing here. Let's see if they're going to take it. We're almost going to clutch at straws to come up with a trade idea for this, to be honest. But this was what we discussed. Let me try and draw this a little bit smaller. But we were looking for this sort of behavior to do like this, go up here, right? Now we need someone in this area to sweep, which it kind of has. It's swept here. We want to see this absorb massively. Okay, so there we go. There's some dude that's absorbing right now. We're seeing the absorption here. Okay, so we want to see if they're going to continually lift it, or if there's going to be some more two-way. So notice someone has absorbed 731 at this one price, and they're continually stacking. Now you would want to see, so let's refresh the delta here. Oh, I can't because I need to do this fucking line. It's making me lose the concentration. Okay, so you want to see the bid now be pulled. Let's clear this. Now you've seen, so they've seen absorption here happen, okay? And you want to see the bid be pulled. So it's not been pulled right now, but you want to see the sellers drill into this, and in the bid just to dissipate. So there's 118 here, 122, 120. When price gets here, you want to see them cancel off and the market start to move down, which is not happening right now. Note delta as well. So we've just essentially creeped our way up here. Nice, John. Well, here's the thing, dude. Fantastic time to get involved. You've got plenty of time on your side, dude. So take your time. Rome wasn't built in a day. You know, 10 years time you'll be, if you continue on the right path and don't give up and track your trades and stay humble, you know, there we go. There's a nice little blip. There we go. Let's see what they're going to do. Now would be the time where you would expect them to start hitting in. Okay. If this continues on any more to the high, you need to start reevaluating your setup for this. So we've absorbed a couple of thousand contracts here now. Same dude, it's absorbed. They've dropped to 700, and another 700 here, 300 up here. So we're a couple of K contracts absorbed in these 3 ticks. Now note, the bid, in order for this to go down, the bid has to be pulled. Sellers need to start coming aggressive. They are not stepping in yet. They're absorbing still. You need to see them step in on delta, and you need to see this bid be pulled to get down here. Watch for NQ being your catalyst. If NQ gets down here, you know, we'll likely see a little bit of a dump. But this was the type of behaviour that we were looking for before we consider. You want to see this pull back a little bit more and for negative delta to start coming in. Oh, sorry, dude. When signing up, did they give you a rhythmic? Oh, right. I didn't read that properly, dude. Sorry, yeah. You need to pay for level 2 data with them. I don't know what price it is, because I use my own data feed with Denali, which is Sierra's data feed. So, Rob, no. No, no. Not been in any prop shops physically on a desk. The closest ones probably to me was probably Futex or now the Axia dudes. I think everyone in the Gran in London used to trade Futex, to be honest. What about yourself, dude? Have you traded any physical prop? And this is the thing: the physical prop business model is completely different to. It's completely different to actually what you're seeing with these online prop firms. These online prop firms want you to fail. It's not a traditional prop model at all. The traditional prop model, you know, you'll maybe get 40% or something. And if you're an absolute superstar, you'll maybe get 60, 70. If you're an absolute superstar. Completely different model. They're there to actually train traders and to basically get them to make them money. No problem, dude. No problemo. Okay, so we're seeing a bit of better behaviour. We want to see these sellers here step in. And we need to again see the bid being pulled. We need to see NQ down here. If we do get down here, then it's going to give us a fair crack at it. How far away are we? We are 15 minutes to the volume. What would be very interesting is in this 15 minutes they come in, there is a shit ton of contracts need to get closed. We are plus 30k delta nearly on the day to day, right? All these need to get closed off, and the offer still needs to get worked. Could we just go to the absolute moon here? Of course we can. We need to see this somehow get back down to this level for any form of fade to come in. But to be honest with you, like I said, you're kind of just clutching at straws with this. To make matters even worse, the Russell is now pumping out of value, Dow is at the highs, and NQ is pretty darn close as well. So, you know, not ideal. We've been hugging this deviation band for the last number of hours. It's crazy. This is an absolute slow grind of death, this, for sure. Nice. Yeah, I saw the main go-to is the Axia dudes. To be honest, that was the Futex guys that moved to Axia, wasn't it? That Alex dude. Moved across. What order do you have your markets arranged? So do you mean the DOMs here, dude? So this is actually, I probably should explain that. Sorry. This is ES. So NQ is dropping a little bit. Let's see if we can. Now would be the short, to be honest, if we're to go. So this is ES here. This is NQ. This is the Russell, and this is the Dow. The two most important ones is the ES and NQ. Then I like to use the Dow and Russell. Dow sometimes is a world of its own, but as I say, I like to see for a painless trade, if this was to dump, you would like to see them all go down, to be honest with you. Typically. Okay, I think the thing, Rob, to be honest, if you're wanting to get into that, it's not that expensive for a seat these days. You can lease a seat or whatever, you know, and it pays itself in a year. You need to be trading some decent size though, but to be doing it. Prop shops it's a difficult business model, man. This is why these online prop firms exist. It's much easier to find losing traders than it is to find winning ones. And a lot of them say that they're there to look after winners, but they're really not. They put the winners into a live account as soon as possible. They're drilling into ES now. Now would be the chance. NQ's going. Let's see if they can continually hit in here. Watch the bid be pulled. But they try and move the winning traders to a live account as soon as possible. But the kicker is they don't put any money in it, and you retain 90% with these online firms. But what's the point? What's the point of why would you even bother? What, you can have a risk manager? You know, that's ridiculous. So the whole setup we're going with prop, in my opinion, is to have an environment with a desk, and ultimately to get more buying power for the capital that you have, and to actually have the benefits of it. But these remote prop firms, the way they're operating now, I'm not really understanding the benefits of going live with them. I've yet to maybe find one. There's probably a few out there that they can help, and I need to probably do more research because I am not up to speed. There's so many different prop firms, so I need to spend some time and doing some due diligence on the other ones, because as we know, one of the top ones, such as Apex, it's been around now for a while, they're not going to be here for much longer. Let's be serious. So, but of course, when your business is simply taking money off failing traders and not nurturing the good ones, the good traders are actually a liability to your business, which is the opposite of the way it should be working. You should be making money and providing education to starting traders, to get them to a winning position, but then you need to give them more benefits to ultimately want them to trade with you. Because if you're just taking your funds that you've had in these prop firms and put in a live environment where you're just paying pro rata fees, the commissions are pretty shit as well. You could probably get cheaper commissions by squeezing your own broker. I just don't really understand the advantage to trading live with these firms. You might as well just trade your own personal account, if I'm honest. But correct me if I'm wrong. I could be looking at it the wrong way. As I said, I've not done enough research, but I need to spend some more time doing, because there may be some gems out there that I've not looked into that maybe just be there to actually look after their traders in the correct environment. So that's the way that I see it, man. And at the end of the day, it's a stopgap before you go live, because if you can't make it trading a prop firm with a couple of grand to draw down, you're not gonna be able to do your own. You're not gonna be able to trade yourself, like realistically. I know the prop firms are. Some of the rules are pretty harsh, and the hoops you have to jump through are a joke. But realistically, if you can't pass an evaluation after like 3 or 4 tries or whatever, you need to be looking at your setup. Either you're risking too much, over leveraging, or your strategy's not sound, or it's not accustomed to day trading, or whatever the script is. Yeah, well, I don't know, mate. I'm not really want to start any real conspiracies or anything, but um, there's just been so much bad reputation kicking around with them recently, and put it that way, I definitely wouldn't put my name to them at the moment, that's for sure. And to be honest with you, once you're funded in these accounts, you shouldn't have to trade X amount of trading days, have a consistency rule, eat 2 bananas a day, record your trade, send it to them, account under, you shouldn't need to do all of that nonsense. That's just there because they very simply don't. The winning traders are a liability to their business. Like, it generally goes down as an expense on their books, and no business wants expenses. It's not like it's a staff member or anything. Yeah, I'll need to have a look at them, John, and see what the deal is, dude. As the last thing I want this channel to become is another one of these YouTube channels that starts pumping people into prop firms, to be honest. I'd rather put pins in my eyes. I care more about my reputation than some prop firm paying me $5 or something for referring people in. It's just not how I operate. My reputation and integrity is more important. So I only would ever put my name to something that I have tried and tested, that I believe in, and I have confidence in. Because the last thing I ever want is to recommend something, and the community that have put their faith in me to recommend them something, and I just do it for the highest bidder, as an example, it's just never a place I want to be. I've operated a lot of businesses in my time, and I stand by that motto. Yeah, no problem. I'm glad you guys appreciate it, And if we ever do go down the stage where it's a prop firm, there would need to be a pretty strong vetting stage, because it's not very difficult to start a business these days, and it's certainly not difficult for me tomorrow to pick up the phone, call Rhythmic and say, hey dudes, how much is it for me to become a funding evaluator with you? I can give you, what's your tiering for pricing for X amount of accounts that go live. Can you give me some numbers and give me your APIs, and I will put that to the development team. Can we front end it, and then in the next 3 to 4 months I could have a platform. It's not very fucking hard when you understand some technology, right? So that's the thing that people need to bear in mind. So, being completely honest with you guys, call up Treasury, call up Rhythmic, get some data, do some APIs, and you know, and also it's a little bit concerning when you go onto some of these websites and they are, if their website is like something that's off Wix, that should tell you everything. do you know what I mean? There's certainly not an API that they've got, that's for sure. It's just a white labelled out the box system given by Treasury and Rhythmic with an R manager tool that they probably have a white labelled fee that they pay to start, and it'll charge them probably in a per account fee for each active trader that they factor it in. And going by the pricing model with how much they charge you, seems to be that Rhythmic and these other companies will be charging them a per active account fee per month, which is why it's a monthly billing cycle. And the reason why they do that is most likely because there's no capital expenditure. So, just giving you a rough idea of how I think the business model will work, but I don't think it'll be far off it, man. The biggest one is at least done some form of integration now, is at least Top Step. I'm not saying I agree with the platform they've got, because it's here we go, we're dumping a little bit now. 10 seconds till the orders come in. I feel like a news squawk. Here we go, let's see the orders come in now. Okay, now would be the time if we dump. Let's see if we're going to dump. Hi John, I've got no idea who that is, dude. Exactly, it's just used as a tool, right? Just used as a tool. I've got no idea my fund. I've got no idea. I can guarantee you that you'll go into these firms and they're pretty much, they're all doing the same thing. Do you know what I mean? There needs to be one that literally says, right, you pay us X amount, right? If we're still sticking to this traditional model, you pay us X amount, you pass, right? Then you go into another vetting stage, but we will then decide how much of our own capital we'll give you. Or if you then take your amount that you've had in funded and put it in live, we'll match it. And let's both make money, you know? We'll maybe put you on a 60-40 split or something, you know, favourable to you, and we'll match the funds. But you've got a max allocated risk per day that we split down the middle, right? And then you're there to grow and make money off the funded traders. That's the way it should be, in my opinion. But the difference between fast track funded or I mean, seriously, can you cannot come up with better names? Does it always have to have funding in it as well? Honestly, do you know what it's like? This is, you know, this reminds me of the you know, the software systems for electronic cash registers. They're all called the exact same. They've got they abbreviate their names. You know, you had like my MFF for my Forex funds and my funded futures, and they're all the same abbreviations and stuff. I mean, I'm ranting on about this stuff. Right, so we are not selling off now. Let's see, we've got 8 minutes to the algo market on close data that comes out. But they all get these weird bloody names, honestly. Okay, so we're just approaching. This is the high. Let me. What price is that at? Let's see if we have any form of. This has been completely one directional. 59 and a quarter, which is here. I mean, look at the amount of buying delta that's coming again. Jesus Christ, honestly. This is crazy, isn't it? The amount of buying delta that's coming in. It's absolutely madness. I wonder what the I wonder what the Cox report is going to say at the end of this week. Hedge funds increased in net positions long. Kyle, don't trade them. I have a rule. If the market's one time framing for more than an hour, like this, you know, go for a walk. I can't tell you the amount of times. This is what I was saying, is if you don't get this price action that we discussed, where the market did this sweep to high and then come back down and closed after you're seeing absorption, right? You don't trade, because then you're then safe to take this position down here. Because if you start fading up here and fading up here, you just get done. So you get done here, you lose here, you lose here, and now you lose again. Do you know what I mean? If you're waiting for that behavior on these one time framing days, it's better. If it doesn't happen, then you're safe. That's the way that I look at it. But then, see, to be perfectly honest with you, I know that this type of behavior I absolutely suck at. So I would, if I identify this, I'm not trading, to be honest. Because if you were to buy, right? Whereabouts are you buying? Unless you bought here, this is the only obvious one after this large size get hitting a clip on the bid, or lifted into the offer at market, and then we just went literally straight line the whole day. Whereabouts do you buy? The only opportunity was here. And let's be serious, the days that you would hold this is the day that it would go up here, sweep the high, and then go back down to VWAP. So you can't win. So you just need to identify that when the market is doing this type of behavior, you need to stay well aware. And this is the hardest part about trading, is knowing the market context for the day that is conducive to the way that you make money. And honestly, this is where, like days like today, see if you only take your personal daily loss limit for this, whatever that may be in your journal, great, that's fine. Because I can't tell you the amount of people today that will have added to this, that will have continued shorting the world, right? And their account's gone. Very, very common for this. I mean, there's still probably going to be some form of pullback in here, but this is just crazy. We are now plus 35k delta in a day. That's crazy. How do I identify that type of day before it's too late? Good question. So you need to first look at your sort of initial balance high. Okay, your initial balance high is set in the first hour of the day, right? Then when you're above the initial balance high, that normally is a sign that you're potentially in play for a trend day. That's one of my rules. If we're above our initial balance high, then we're in play for a trend day. This is pulled back, right, to the previous day close. Then we're now back above the initial balance high, and then you better believe as soon as you start getting towards the initial balance extension as a full extension of the initial balance, there's no return for this. So you just need to be aware of these types of levels. It's very, very common that, you know, if you break the initial balance low, then you're potentially anything below there is in for a potential down day. But here was an overnight low, so you need to clear that in the previous day low. Also, if you're not only above the previous day high, you're above the initial balance high. So just all these little things you need to keep in context of, you know, the market gives you these little sort of signs. And to be honest, if you didn't catch this fade back in and you caught this, right? If you took this short back into the mean, you're up, you know, up 1 hour. You took this short, you get stopped out, and then it does this, then that's you done. You know, because now you're above previous day high and above initial balance high, as an example. Now no one knows it's going to do this. Only the large funds know they can do this because they can pump 35,000 contracts in and lift the offer all day with no selling. Yeah, this is exactly it. All the shorts are now covering, but as I said, you know, this is the high. What will probably, we said before we jumped on this was too far away. We've still got 2 minutes, so as 1 minute to this comes out, let's see what happens. This is an absolute ridiculous candle. So we still need, these people that are buying still need to cover, to be honest. But my objective in trading, guys, honestly, is see these types of days. If you can basically just not trade these, you would do great. Because the market doesn't do this enough for it to be a profitable strategy in itself, in my opinion. It does this maybe once a month, or give or take, something like that. You know, probably not even this type of behavior. Right, so 15 minutes. Sorry, not 15 minutes, 15 seconds to this order comes in. Let's recenter and let's see what shenanigans they go for. I think if you basically break above yesterday's high and hold above yesterday's previous day high, yesterday's high, sorry, you need to start rethinking your fade back to the mean. And as we said, you know, whatever way the market went out with this sort of range in here, it was going to go one way. I was expecting it to go to the downside, to be honest, but that was what, 7 hits or something, 6 hits down here. So we'll get some profit taking now, but it looks like again the move has already happened because it's went super bid, but I would expect there to be some profit taking here unless we end in a massive spike, but we will see. We all do, guys, that's the thing. And the more you become attuned with it and you start knowing, another thing as well is you need to know what your average daily range is for the product that you trade, right? How often does it extend a standard deviation above ATR? What's the probability of that? On the flip side, what's the probability of below a standard deviation of the ATR? What's in the mean? How often in 1,000 occurrences does that occur? You know, is this the market conditions for that to happen? You know, and use some context for the day. Another thing is delta as well. We've been plus 20 odd K delta for ages. I think as soon as you're getting like plus 20K delta, probably even slightly higher than, lower than that, like probably 15. A normal day for delta is like something between 8 to 10. That's relatively one-sided. When you get up to this 45,000 delta, pretty one-sided, guys. You know, but I'm right in saying it's hard to identify it when you're not. But the main thing is, if you are on the wrong side of that and you do just take your managed loss, you just take your managed loss. You don't continually steaming and shorting and try to fade the world, you know. I just use yesterday's previous day high and low because I use the overnight high and low for the current day's session, but I use yesterday's previous day high and low, just whatever it is. And to be perfectly honest with you, very, very, very rarely does it not extend above overnight high and overnight low anyway. But all these levels are just context. They allow you to give you an idea of a balance day, a trend day. And the first thing, if you're in a trend day, you would probably think, well, if we're trending up, surely we would have probably broke yesterday's high. What about the initial balance high? What is the buying pressure like for the day? Same for the sell side. Are we below the initial balance low? Have we broke yesterday's previous day low and held below it? What's the delta like? Does the delta make sense for what's happening? How has the offer been or the bid been, on how to get price? If you've been watching DOM, what's been happening. And to be honest with you, this is just my opinion, but when the market gets this time of day, you should probably be done anyway. If you're not made your money in the first couple of hours of the opening session, by the time it gets to lunch, unless you consistently make money in the PM session, it's probably better to just not trade this. Because what time was this? Is my time. So that would be 1 o'clock. So this happened, is that right? 6 o'clock, 5 hours, 1. Yeah. So this happened after lunch in the US. So we already had the jokes numbers come out. The jokes numbers came out at 10 a.m. Is that right? Yeah. 10 a.m. US or Central Time, whatever time it is. You know what I'm saying? You could avoid this because you're only trading the first couple of hours. It all depends. You just need to come up with a plan of attack, because once you, it's the way that I look at it. I would rather not have days like this and not trade at all than potentially have a day where I can catch the fade and make tons of money. I've been been doing it for so long, and the older you get, I suppose, the more kind of risk averse you become, to be honest. But let me know if you guys have got any other questions. You guys have been on a roll this evening. We've got a couple of new faces, to be honest, or names in the stream, which is much obliged. There we go, seeing a little bit of profit taking, but to be honest with you, that is all she wrote, because look at the time. The time is normally 5 minutes, probably 4 minutes to be exact, but 5 minutes for sure after 4 o'clock is the time is done. So now we just, we will chop from probably here, potentially to here, and that's the range now for the next 54 minutes. But we'll see how the market does it. Good, John. I'm glad you look at it like that, dude. I suppose it just comes with doing it for a while, like everything. You may be thinking as well when you're looking at this, how do you manage to look at 1, 2, 3 and 4 DOMs at the same time? And the answer is practice. And I'm not reading them exactly. I'm looking to see, are we in lines? What's happening? Are we absorbing? Is it following in tandem with the whole market? Everything is practice, and when you do anything for a while, you get good at it. But trading, the trouble is with trading, as you guys have learned by now, you can do everything correct in trading, absolutely everything and have a losing day. That's just the way it is, which is okay. Nice. Well, NQ is one of the main ones. I would probably recommend, if you don't want to look at the other DOMs, it may be worth just getting Tick Strike and just have the little Tick Strike boxes beside you, so it gives you either a sound cue with a tick, or you can look at the visuals on it. And very typically, it can definitely help. You can have it. You can try it in trial for other correlations, but if you find just NQ works, NQ is pretty much the main one, to be honest. But all these little things, I feel people can potentially try them to see if they add value to them, to be honest. Just going to pop this in the chat for anyone. I know there's a couple of people that are supporters, which is much obliged. Big shout out to everyone that's in the coffee gang. It's much appreciated. Yeah, NQ definitely leads, dude. Well, Jason, ES now trades differently to what it did, a number of years ago. So my day trading now consists of treasuries, where yesterday I got an absolutely home run trade on the 10-year. I took like 9 ticks, and when you seen I had to fight all day today to make 6 ticks, I think. I did that in one trade, and six ticks is actually a pretty good day when you hit it with size, to be honest. But you may be thinking, what the heck? But my stop on treasuries is 3-4 ticks. It's just a much thicker market. But yeah, it's the same sort of setup. They should all be moving in tandem with each other. You want to see, for example, price. I'll clear this. It's hard to do this as an example in ES because it's pretty thin, but it's slower. So right now you want to see the selling in here, right? The lifting in. So you want to see them take out this price. They reload here. So they reload 50s, okay? You want to see them take this price, and then when they take this price, it ticks up, and then it instantly reloads 63.5, right? That's the type of behaviour you want to be seeing for aggressive. The trouble is with NQ being so thin is it bloody bobs about all the time now. Forget NQ. NQ you can sneeze and it moves 20 ticks. Seriously. So you can see right now they've hit 114 into the bids. They just hit another 40, it ticked down. Okay? So you'd want to see for the sellers. I mean, it's hard to explain because ES now, by the time I'm finished the sentence, it's moved. But the premise is it takes a price, then it reloads the next one here, right? So lifts, reloads, and then it continually drills and lifts into the next price. And when you're seeing that, you're seeing the bid continually step up and reload and refresh the next price. And it's very simple to see in treasuries because treasuries is a much thicker market. It doesn't do this shit over 2 and 3 ticks. These guys slap it about a lot more. When ES was much thicker, when it was like 300-400 bid, say 400 bid and 400 offered in each price, when it was much thicker, you didn't have this bullshit where it was flopping around like 2-3 ticks. So that's what you're seeing now. It takes that out. They're reloading 63.75 here, right? They tick up, then sellers then step in. So it's not doing anything, It's very hard to read the exact sort of flow on this when it does that sort of behaviour. Do you chart? Do I use charts? Yeah. Right. So let me quickly run through this. Right. I'm going to go and close this and see. Just to show you the difference. Okay. So close chart book. Right. And let me open up the Treasury's chart book, where you'll see the difference. So this is my setup where I have delta here. This is the weekly profile so far. Okay, this is the 10-year, this is the 30-year. Okay, and then I'll have this setup right here where this is my footprint, not footprint, sorry. This is my market profile of the 10-year, where this is the previous week, where this is the monthly lows with some volume, so it gives me some context of where we are. Now look at the difference between the 10-year, the 30-year, right? Look at how thick the price is. I mean, look at this. 3,906 on the bid, 5,000 on the offer. Right? The market doesn't blip around 3 and 4 ticks. It's such a thick product. Same here. This is much thicker. The Ultra Bond is thicker than ES. Do you know what I mean? So I use this as correlations across the board. Same way I mainly trade the 10s and trade the 30-year, and on occasion do a catch-up trade in the Ultra, but not very often, to be honest. Yeah, exactly, Rob. The thicker a product is, the much better it is, in my opinion, because it's less. There's less shenanigans that can happen. You know, just how it works. This actually ended a lot higher than what I thought. I was thinking we'd have reverted back to the mean here, but as you can see for the 30-year at the moment, this is where the previous day close was. We didn't even hit a half ATR today, so it was a pretty nonchalant day in treasuries today. But if I can explain what I mean by this, so let me just get a pen here and explain this, make it a bit smaller. Okay, just need to make sure. In fact, this makes me a bit anxious having this on. I don't want to press buttons anywhere near the DOM when I'm. Let me turn this to sim in case I smash buttons. Right. Okay. What I'm saying here is, so you can see there's 1,574 hit into the bid here. Okay. In treasuries, what they will do is they will hit into this. It'll be drilling, so they'll hit into this price. Okay. And when they're doing that, there's 2,519 on the bid. They continually add, pull, and stack these orders. But what they'll do is they will hit into this price, or in this case, lift. Okay. And when they do that, they go into the next price. They will take the full amount. They'll take the full 5k there, and then they'll instantly reload 2,000 onto the next price. And at the same time, on the 5-year, the 5-year will be doing the same. Or you'll maybe see that the 30-year has already done the same, and the Ultra may be lagging. So it happens across the board, right? And it just happens much slower, and it doesn't, very rarely do you see, they'll not, come in here and sell 3k, and then the market will just instantly dump down here. That just doesn't happen in treasuries. It just doesn't do that. And most it will do, if someone comes in and basically fat fingers, it will drop maybe three ticks or something, most, and that's a rare occasion. So that's what I was saying by the thicker book. It's completely different for just how it works. And look how thick this is comparison to yes. And this is why I trade this, because it's, if I'm in a bad position and I'm down a few ticks, I can normally go out for scratch, as an example. So only market that you can trade where you can pretty much nail it to a tick. And the tick to commission ratio for these products is very good as well. The 30-year, each tick we'll just round it slightly down. It's $31 a tick on the 30-year, and we'll call it $15.50 on the 10s. It's half that and then half that again on this. I wouldn't really trade the fives. The fives are just used for correlation. The tick to commission ratio is not that great on that. Well, yes. Well, I find that it's easier. It's easier on the soul, to be honest. When you see the likes of ES today's had an absolutely parabolic move, Treasuries has not really carried out anything, and you don't really need. Seriously, I only need 3-4 ticks a day in Treasuries. When you're hitting 5 to 10 lots or whatever you're trading your size, you'll need 3-4 ticks. If you've got 10 lots on the 10-year, and by the way, you can sling 10 lots in this and not even be noticed. If you put 10 lots in the NQ, you'll move the market because it's so thin. It's not a scalable product either. But if you were to trade this with 10 contracts, right, and you're making 4 ticks, you're going to be making the guts of $400-500 a day. So you'll need 1 trade a day. Or if the market's flopping around when you get in, you can just take your 1 tick. And it's just an easier market. That's predominantly why I trade it. It's a very boring, slow and steady market. It's fixed income, it's government debt, so it really can't go haywire, to be honest. Well, that's not true. Of course it can go haywire, but it's not as volatile as indices. That's the way. Good question. Trader Boy, I switched to trading treasuries because ES is not as conducive to how I like to trade anymore. I'm an order flow trader and I prefer to trade when the book is thicker. My eyes cope better with slower moving markets, to be honest, where it absorbs over 1 to 2 ticks, preferably 1 tick. When it starts to absorb over 3 and 4 ticks, I find it a lot more difficult, in my opinion. But it doesn't mean I still can't trade ES. I just don't find it as easy, and I'm not here to trade anything fancy. I'm here to be profitable and be here for the long term. I've traded treasuries for a long time as well, and sort of flopped back between them. I've always traded them as well, but I would say treasuries has definitely been, for the last couple of years, I've made a gradual switch more just towards treasuries, and it's been a gradual side because I used to be an ES specialist. That was the only thing I traded, but it's changed. I mean, it's really changed ever since COVID. It's been shit. The market, like, literally overnight just vanished. Completely different. And also the start of this year as well, I find it's even more. Yes, it's just not as smooth. No, a number of years, Trader Boy, NQ whip sawing me to death. Ghost, of course it is. Of course it is. It's such a difficult one to trade, dude. So how many days? So typically in treasuries, I win about 80% of my days, and then the losing days, I make sure they're capped to a personal loss limit. And normally I give myself of a day 10 ticks. If I am down 10 ticks in a day on treasuries, like I've had a shocker, to be honest. So Treasuries, I'm normally at my desk. I'll do it in US time from 6:30 a.m. US time till about 11 a.m. US. A lot of the important data points come out at bond open as well. So, I don't normally trade the first 15-20 minutes till it calms down. The normally a lot of good trades. The market just before open, the last number of sessions is basically, it's been pretty straightforward. To be honest, I mean, this is the thing, guys. I'm not got a bloody Treasury flag here. I've not got a Treasury flag here and waving it for everyone to switch. I'm just letting you know that just slightly different to how I trade. And I would love if ES went back to see what the Bund is, right? Not the Bund, sorry, the Ultra. Well, actually, I was probably going to say the Bund. The Bund is probably what I would like ES to be like, to be honest. But even if ES was like this, where you're seeing 500 bids, 600 offered, even maybe I would even take 300. It's nowhere near 300, nowhere near anymore. So if that went back to that, I would be all over it, but it's not. Eastern time. No, 6:30. It's 6:30. Bond open is 8:30 a.m. I'm there from 6:30 a.m. Bear in mind, I trade in the UK, so that's it's like half 11 in the morning. 11:30 a.m. is my time to it's about 3-4 o'clock my time. Typically it's the time I trade. I don't normally trade evening session at all, and normally I'm in and out by lunchtime US. The market, and the reason being is it's not because there's not any opportunities. It's just I'm too tired. To be perfectly honest with you, there is no danger after looking at these 4 DOMs and watching refreshing bids and offers all day for 3-4 hours, that when it comes to 9:30 in the evening, that I'm going to be able to make the same decisions and quality executions as I was in the morning. It's not possible. I'm more than likely to lose money, and I treat it like a job, like any other business. No, Jason. This is the slight misconception about So this has been today's range. This has been today's range from here to here. This is the range on the 30-year, and this is the range, of course, down to here on the 10s. This is where the market closed yesterday. Here. This is where the overnight low was. The overnight high must have been here. This is where 50% ATR is, or the average daily range. This is where we opened the previous day. So this is just inflection points on the DOM to let me see a quick glance where it's at, so that I don't miss anything, any key parts. But there's been a ton of selling pressure continuously. Then really today, to be honest with you, was just some profit taking in my opinion after an absolutely fiendish dump. Because if we quickly, I need to quickly change the cursor now. If I go to here, okay, so this is the 10-year. This essentially was yesterday, where we had this continual dump. So we had a slight pullback in the overnight session. We then just dumped for the rest of the day. Today's been some profit taking, but look at this crazy dump here. We just continual selling that happened, and this is basically on the back of the Fed coming out and saying they maybe not cut, and there was bets reduced for the September meeting that the Fed will not be cutting, reduced by 15%, which typically increases yields and decreases bonds and those. They move inversely to each other. So I just have a rough idea and draw out these levels. These bands just give me a rough idea if we're in whack or out of whack. And then I draw out the high volume nodes that you're seeing with my standard rectangles. I pay attention to delta, and once I've done a quick idea and roughly see what's happened in the overnight and what I'm expecting for the day, what news is coming out, I then close these things, and then I go back to here, and then I'll potentially again just look at profile because I like to view the market like that, and that is pretty much it. Then I have my key inflection points on the DOM, and that's it. No problem, Rob. Thanks very much, buddy boy. But you'll see, Jason, where there'll be like 300s will hit it, 3000 will hit in here, then 2k will pull, it'll tick down. And then you'll see this reload, right? You'll see this instantly reloads, and then it'll hit into the next price, some will pull, and you want to see that continually happening across our markets. And it happens at a nice pace that you can see it. Yeah, I mean, Ghost, Russell and Dow are not really volatile, and they're the same tick value as NQ. I don't know. Euro stocks is probably even a better trade than ES at the moment. But hey, this is, I'm biased. You know what I mean? Like, I am an order flow guy, so and I specifically trade on the DOM. So I'm there to see, I'm there to trade at the least the path of least resistance that is obvious for me to have an edge and to trade with larger firms. And also the thing is as well is this market is just full of big funds and full of hedging across the board. There's a lot of spreads that happen, and a lot of retail is not involved in this market. I mean, look at this. The whole of retail could probably press the buy button and not move at a tick. Absolutely not, Jason. So if we're doing, so right now I can see, right, there's 3k been pulled. Okay, so they hit in that, they've just taken the next price, just saw it in the fives. They've just cleared here and then reloaded 602. So what you'd want to see them tick down into 2, 2, 3, 4, 8, into nines. So you want to see them tick down and then some to be pulled, and you want to see this offer stay strong. Okay, but you need to have a rough premise of what's happening. Are you expecting the market to extend the profile, and go up and maybe make an ATR? Are you expecting it to mean revert back in? What's generally happening? What is the flow? Again, you're back to the general concept of overall what's the context of the day. You know what I mean? But treasuries will make it extremely obvious, like they'll faff around in a 4-5 tick range, but then sellers will try and hit it, and then the bid will stay really strong, and then they'll lift into it. But then when it comes up to the highs, all of them will be at the highs, So you're there just to go with the momentum. So you can see there they just took that out. They've just taken 3,512, took out that price, then reloaded 2k. But as you can see, they did that on the fives first while we were talking. They've hit 565 in here, and 1,000 odd contracts were pulled. So you want to see the 10s, the reloads. They've just taken that out now and then reloaded on the bid. Okay, now I'm just using this as an example, but this is the type of behaviour you need to be looking at, because we're right bang in at point of control today. Like right now, nothing's going to happen. But I'm just using this to, like, when it's at say, let me get my pen out. Say when it's at here, right? When it's at the value area high, and also the 30 year is up here, and then maybe the ultra is just faffing around down here, right? Down at this sort of area, 05s. you maybe have an opportunity if this is lifting into the price that the ultra needs to play catch up, as an example, or you're anticipating that they're going to go up here and try and take some stops up here, just as a rough idea. So I hope that makes sense, and me rambling on here. But let me know if you get any other questions about that. But you're saying if it's lagging, again, I'm really looking to go with the momentum, but you need to almost gauge in which way they're going to be going. It's extremely, I wouldn't say it's obvious, that's the wrong word, but it becomes apparent that there is a high. I'm just trying to think of how I can do this. No, I'll need to. In fact, what am I saying? I've got fucking videos on this. Jason, if you go onto the OrderFlow playlist, there's an absorption and backticking video on Treasuries where you see a huge order step up and absorb. They backtick it and then hit into the bid. I explained that in that video, and then there's a DOM scalping video where we do an extension of the profile where the profile is looking pretty thin, where there's a series like this. The market gets up to the area, and then they basically pop through it and sweep through those singles that are left. That's there. If there's an order flow playlist in the description of the video, this video, where you can run through the couple of different examples. I pretty much have two different main strategies for treasuries, which is a profile extension where I'm looking to go with the momentum, or if we have days like this where nothing is happening and there's no data coming out for anything to happen, I would be looking to really fade. Market gets down here, we see some defense down at the overnight low and value area low, and we look to basically fade back up to the point of control sort of area. Also today was weird because the 30-year was extended to the downside, and the 10s were not, but it looks like it's corrected now, where we're essentially all just at the VWAP price, with the 30-year maybe being slightly higher. Sorry, the ultra being slightly higher, but everything is pretty much just now at the VWAP. And when price is at volume weighted average price, you're pretty much in balance because that's the average of all the volume carried out for that day, very simply. But any questions, dudes, if you watch those videos, leave them on the video below. It's easier for people to comment on the videos because it keeps it in one place, to be honest. I see some people message me on Discord and I get tons of messages and I never get back to people a lot of the time. I'm quite bad for that, so if you leave a comment in the video, I can see it and make sure and it sort of ticks it off. But yeah, let me know if you guys are getting any questions that you've got, or is that all she wrote? But do you guys understand what I'm saying for how different this is to ES? It's a completely different beast, And also, this doesn't go up 15 ticks, absorb and then whip back. It doesn't do that. It's not as volatile and whippy. It tends to trend a little bit more, but it's more obvious when it does. It doesn't, it's just a different beast. You need to spend time with every market. I recommend you watch the video with which future market should you trade or what product should you trade. It gives you an idea of how the thickness of the book is. That was done a couple of months ago. And also factors in the tick to commission ratio per side. And tick to commission ratio is not spoken enough about, in my opinion. Also, if you're new to the DOM, there's a video in there as well that says what is the DOM, how to read it. We cover a lot of the order flow stuff in that order flow series. I tried to make it a sort of comprehensive guide on taking you from A to B. So if anyone's got any ideas where I can try and alleviate some of the stuff I talk about, because it's, you know, we've been doing for stuff for so long, I'm very aware that you gloss over stuff that is important that you get, but somehow you don't. So, you know, tell me to wind my neck in if I'm glossing over something too quickly or whatever, because that's not my objective. Good question, Olav. I would say probably, it takes years, dude, but if you watch the DOM for 3-4 hours a day for a month, draw out your key levels on the market and watch the DOM without the charts. You know, look at them for your key levels, but try and get away from the standard charting stuff, and it will change how you your perspective and how you view the market. But it takes time, dude. Like anything, practice, practice, practice. And obviously, I've got, you know, 4 DOMs up here. People, when they first look at this, they stray away from it because there's so many numbers. I'm not looking at all of these numbers. You know, I'm certainly not looking at the numbers that are 10 ticks away. I'll maybe think, right, there's some orders down here that ultimately want to get filled, but we're far away from that at the moment. You know, in Treasuries, for example, I'm only really caring about the next 3 ticks here and the next 3 here as to what's happening. You know what I mean? And I glance across the board, and the corner of my eye, I can see that when someone's hitting into the bid and it clears, you know, I'll see if they'll take this price here. And then if you take that price and then reload on the offer, are they going to do it in the tens, and then so on and so forth? And you'll just see them continually hit down, and then they'll maybe try and get down to here, which also is the value area low down here, and then they'll potentially revert back to VWAP, for example. You know, I'm just giving you some rough ideas, but it's hard to explain. You know, it just comes with practice, man. But I can tell you, volume and size is what makes the market. It's only what large traders and large firms give a shit about. They don't care about head and shoulders pattern, for example. You know, and why would you? If I gave you 50,000 contracts to execute in the 10-year, are you really going to give a shit about what a candlestick is doing? You're going to think to yourself, how the heck am I going to get these filled? You know, I want to sell 50,000 contracts, so I want to try and get them filled up here, right? So what I'll do is, I know that I've got 50,000 contracts to sell, right? So put yourself into a large trader, right? I've got 50,000 contracts to sell, and I want to try and get the best price. Now I know that when it gets up here, I'm going to sell, and I want to get out. Now what can I do? Well, I can buy. I could buy price up here. What I'll do is I'll spend a couple hundred to see how the market reacts. Okay, the offer's pulled away, so the offer is actually quite weak here. So I'll buy some more, and then before you know it, more people join you, and then you're up here. You're up at this price, and you were looking to sell up here. But here's the beautiful thing, you can start layering and get out of your prices up here because you've got a huge amount of size to execute. So you know what the market gets up to this price in these 3 ticks, It's not going to go any further because you've got 50,000 contracts to sell. And that's what these firms are doing. And your job is to try and work out, where is the big guy going to step in? Because we're not moving the market, you know. We're certainly not doing it. We need to try and pay attention as to when is the next big guy going to step in and either hold the price or take the next price. Right? And try and put yourself almost as if when you're trading, whereabouts would you execute large size and where would you try and stop traders out? Pretty much. And the reason being is they're collectively doing that because that's where the most action gets carried out, because they can simply get easy orders filled. Does that make sense? Put yourself into their shoes, because they don't need to trade a direction. They can work. They're working the bid and offer at the same time. If the market comes down here, well, they just simply, you know, they can hold it and they just buy it back up to the mean. You know, but they probably were the ones that sold it down there in the first place, because then they can also get out of their position and they want to be long anyway. So they can start buying down here and take profits on their sell positions, and then before you know it, they're doing the same thing. That's just traditional market making. The 5-year is ZF. 5-year is a ZF, 10s is a ZN, the 30-year bond is ZB, and the Ultra is UB. I don't look at the 2s. Sorry for your eardrums, people. I don't look at the 2-year. It's a little bit too short. So I've got the short, middle, and long end of the curve here. And it's quite alarming right now that, like I was discussing at the start of this video, the short end of the curve, you're getting a higher yield than you are the long end of the curve. It's the opposite to that, which is an inverted yield curve. And going by every previous time this has happened, it's the sign that there's a recession incoming. Just as a heads up. So we'll see how this election year goes, and if that continues, then I suspect we'll probably have an absolute plummet in equities if that continues. Which should make sense. The market's been going up for far too long, to be honest. No, Jason, not all the time. It depends on the day. Jason, how do I stay patient? Well, I only trade 3-4 hours a day, dude. I don't sit and watch this all day. I would be bored out of my mind. I've not got the patience of that. I trade 3-4 hours a day between 6:30 a.m. And when I get comfortable with the market, check what the sentiment is, you know, just get a general feel. Then I'll really look to start getting engaged about, you know, 7:30. I'll potentially look to be mean reverting if I do get in any positions before then. And then as we get round about an hour before open, if there's not any data coming out, I'll maybe try a position. If there's data coming out, I will wait till after the data. And then I'm normally trading to about lunchtime, and that's it. So if a setup doesn't happen, like, I only take what the market gives me. If a setup doesn't happen, I don't take it. Very simple. Don't need to trade every day, man. Yeah, exactly, Neil. It's just this weird, man. Setup of the market's weird. I mean, it's not like I'm that. But what's that Burry guy's name? The dude from The Big Short. You know, but I'm sitting here banging the drums and going all in short. What was that guy's name? David Berry or something? Is that his name? I'm making that up. You know what I'm talking about. Is it possible to scalp the dawn without TPO and candles and delta? Yes. What you see right now, this is what I use to trade right now. I have a recent session profile here. What you're seeing here, right, is today's profile. So you can see a pretty much distribution, you know, value area high, value area low. This is the distribution for today. This is the last, oh, I can't scroll up. Wait a second. Okay, this is the profile for the last like 40 trading days, give or take. No, it's not. It's actually 40 candles, so it processes into the last 3 weeks data here, which just gives me an idea of where the volume is. And funny enough, I've just drawn that, and look, it's another distribution. So this is the volume point of control here. We then have a dip or a lower volume area here, same here, and we are way out of value, which happened with that huge dump. So it gives me an idea of where we're at. Does that make sense? But we're starting to fill out this area down here a little bit. You know, we can see there's a slightly higher volume node here. You know, the market's now trading out this area here. So typically I would expect, look at that, where the market defends. This is singles, right? The market always defends the first area, which is where just by chance the overnight low is, and then we've reverted back into the mean for today. So, and the 50% ATR, you know, can happen to up and downside. We've not even put in a full ATR move today. Sorry, a 50% ATR move in the 30 year. And if that's not happened, right, by probably after lunch, in my opinion, say 1 PM, the chances of Treasuries then putting in a full ATR move is pretty unlikely. So then you could probably play a mean reversion back to the mean, back to this guy here. So all you're doing is playing probabilities and what is most likely to happen. If there's no data on the calendar, do you think someone's going to step up and start banging price? If there's no data, nothing's going to change the sentiment for the session. So why would anyone bother? Especially on these markets, they're so thin. Sorry, they're so thick. So why would you know, come in and change it like that? Do you know what I mean? So Michael Burry, that's the one, Neil. Spot on, dude. Olive, definitely you can scalp without TPO and stuff, but I would say keep them, look at them, what's happened overnight, but usually, you know, try not to rely on the traditional charts so much. You know, check them a couple of times a day or whatever, but you don't need to have them up. This is, if I'm trading treasuries, this is what I have up. You know, and then very simply, I'll quickly just bring this up so you guys can see. But I'll bring this up and I'll say, okay, you know, this is the month lows that we've got here. You know, and I already had this level drawn out. I mean, I drew this for a specific reason because the market's dumped off, filled out these single prints here. You know, we've now filled that out, and after we've dumped down here, the next sort of largest volume area where we're likely to stop and consolidate around is down here. And what happens after you have this absolute capitulation and dump? Well, these firms that sold it down here need to start taking profit. So they've taken some profits off up here, and now we're just consolidating here. And considering we have a half week, we're probably going to finish like we discussed earlier, but we're probably going to finish this week somewhere in this range. And in this range, it's going to depend on Friday's data that comes out to really change the sentiment. Otherwise, we'll just dot around here. But in order for us to change the sentiment and go back up and reclaim, you know, this range up here, you know, we're going to need to probably see a change in sentiment. Same with the downside as well. You know, we've now built up quite a bit of value down here for this week. So unless the sentiment changes, traders are going to be fading this back into the mean and trade out this range. That's how I look at TPO. Just gives me an idea. But I draw out those levels. I'll then say, okay, there's a large volume node here. So let me quickly clear this. This is very simply what I would do. Okay, just to keep it fairly straightforward stuff. So I go into here and then say, right, okay, this high volume node, you know, is 3.5. 9 3.5s on the 10-year. So I'll go down and then look at that. I've already pretty much drawn it in. That's funny. So yeah, so that's the setup that I would do. I just note that level. I'm expecting if price gets down here, for it to sort of bounce up. That's pretty much it. It's nothing special. It's just experience. What did you have up? Yes, the 5, 10 and 30 year traded boy. That's sufficient, dude. You don't need the ultra. 5, 10 and 30. And then you're only looking to execute in the 10s. The 10s is, I recommend to start in the 10s. Sorry, the 30 year is a better tick to commission ratio, but I find that the 10 year is slightly easier to get filled to get out in a bad trade, for example, as well. But the 30 years a pretty good trade right now because it's thicker. To be honest, it wasn't as thick as this a couple of years ago. Like 3 years ago or so, it wasn't as thick as it is now. It was like maybe what the UB is right now, and the UB was much thinner than that. It was like ES level. But does that make sense? You guys get any other questions? Now, if we quickly look at this, let me just jump in. We'll still have this up. So this is basically where the market's ended. This is the 2 year, the 30 year, the 10 and the 5. So as we said, this is where the yield curve is inverted. I typically check this out, but it's a nice way to gauge it because this moves inverse. So when this is moving down the way, right, futures move up. So this is when this is the 10, so right this here, this is the 10, this is the 5, this is the 30, and this is the 2, which is crazy that the 2 is up here. So put this into perspective, which is crazy how the world is right now. You're getting a higher yield for locking up your money for 2 years right now than you are locking up for 30. So does that not tell you that there's not really much faith in the government's setup long term? It certainly does. You're getting more money for the 2 year than you are for bloody 30 years. That is not good. This 2 year should probably be like down here, maybe 4.15% or something, maybe here, shouldn't be up here. That's for sure. And I check at this because these move inverse the treasuries. So we can see that these have been going on an absolute massive tear. This has, so is this, so is this, and so is this. They've been doing that, and what's happened? Treasuries dumped. Treasuries went the inverse direction. And the reason why this happened was just simply on the fact that the Fed said, nah, we're not cutting anymore. So traders, and by traders we mean large funds, basically reduced the bets by 15% that the Fed is going to cut in the September meeting, which basically said, okay, well, yields are going to be higher for longer then, which causes a downturn in treasuries. Very simple. And that's it. It doesn't take a rocket scientist, to work that out, man. But once you get accustomed with it, you just, and when the market's going like this, you don't fade back to the mean. When the market's doing this type of shit, you just go with it on treasuries. Well, treasuries would be going the other way, So, any questions about that? Does that make sense, or am I rambling on too much? But anyway, guys, let me know if you get any last questions. Look to call it. I'm going to go and grab some food and probably take it easy. But that is pretty much. I'm getting quite used to this pen actually. It's quite a nice addition. It helps explain things a little bit, I think. How does the pen look? Can you guys see that clear enough? The pen. It's a nice addition where you can, like, do I need to make it a bit thicker, or is it okay? Yeah, maybe I should do it like that. Neil, I'll potentially have a look tomorrow. I would not be doing any breakouts when, at all. I'll maybe see if there's any mean reversion, but to be honest with you, I might just take the days off, to be honest, and have a break. It's nice to get a half week. You don't need to machine and show up every day, to be honest. If anyone's got any questions, shoot me a line or whatever, and let me know what your thoughts are. Hopefully, you guys enjoyed the stream and we covered a few things. I suppose my objective here is just trying to get people thinking about the market slightly differently, and just to get you thinking a little bit more longer term, man, rather than it doesn't need, it's not about the next trade, the next trading day, or the next trading week. It's a series of quarters that make up your year, not one day or one trade. No problem, Neil. Thank you very much, buddy boy. Okay, chaps and chapettes. Hope everyone has a fantastic evening. And we'll let you know if we're going to be on tomorrow. I think it's definitely reduced trading times over the next couple of days, so we'll probably not be on, but I'll let you guys know in the Discord. If anyone's got any questions in the meantime, feel free to let me know. If not, I'll catch you in the next video, in the next stream. Peace everyone, have a great evening.